Good morning, traders. James Thorpe here for stepping in for Steve Miley on Thursday, July the 21st for Trade Day's daily morning meeting. I call it a morning meeting because I'm sitting here in Chicago. So good morning to our US traders and our traders in the US time zones. But of course, it's an afternoon meeting for our European listeners. So good afternoon to you guys, and it's an evening meeting for our Asian traders. So good evening to you guys. Thursday, July the 21st, ECB day. So a lot of focus on Europe today. But before I get into it, I just want to show you something here because I think it's very useful. Canadian futures trader on YouTube. So we did an interview with the Canadian futures trader a few days back, and it was launched on Monday. Interview with James and Steve. So, if you haven't seen Steve and I interviewed before about why we set up Trade Day, our backgrounds, who we are, etc., then I encourage you to go over there. But this isn't a plug for Canadian Futures Traders channel, but there are a couple of things I actually want to show you. I apologise that it's zoomed in, but I'm trying to keep out links to our competition. But one thing I want to show you is CFT went through the trade day sign up process. And this is a pretty good video because it's not the first part that's signing up, but the second part where he talks about what his approach to trading is. And now, I'm not expecting you guys to sort of, change the way you trade by any means. That's not what I want you to take from it. But the second part of this video, I think, has some very insightful ways of looking at the challenge, how to approach the evaluation, and how to pass the evaluation. So there's that. And then on the second part, there's some really good stuff on thinking in ticks and calculating your metrics in ticks. Now, I covered this as a thought for the day last week, I think it was, when I did a webinar with you guys. And good morning, Clinton. And it's a really important thing. And I keep banging on about it because I get every time, well, not every time, but when I speak to traders, I often hear people talking about cash. Oh, I want to make this much money. I want to make that much money. Or if I'm up $300, I'm going to go home. And you really need to shift this thinking from cash into ticks. It's a much better way of viewing the market. It helps you with your risk management immensely, particularly when you're switching between different size contracts that have different notional values, particularly the micros and the minis. And I think the CFT here, Canadian Futures Trader, you can just see in his setup, he doesn't talk about the psychology of thinking in ticks, but you can see the way he approaches the challenge, thinks in ticks about what his target is, what his loss is, what he's willing to risk, etc. So I think the second part of this video here, Trade Day Sign Up Plus, if you have time, please go over and watch it. I think you'll get a lot out of it. He also plans on posting every day his attempt at passing our evaluation, which I think is also great content. What you'll notice from his trading, he's very much order book driven. And he uses Jigsaw and as a preferred tool, but he's very much order book driven. A man after my own heart. I very much look at the order book myself. Start with a fundamental analysis of what's going on in the market. Be aware of my technical levels of support and resistance, and then trade sort of kind of like the order flow. But obviously, a lot of people, everyone's different, right? Some people trade technicals. So again, this is really not about, hey, look, this is how you should be trading futures. It's not about that. It's more about like the approach. And what actually happened on his first day is he had a trade set up, he entered, he lost money, he closed out the trade, and he walked away. Right. And, a little bit of, oh no, look how I started the first day of the challenge. And he talks about, oh, that wasn't a very good start. Well, actually, for me, when I look at it, I think that was actually a good day's trading. You know why? Because he had a plan. He went in, he made the trade. It didn't work out. And he wasn't tempted to try and fight to get it back. He'd lost as much money as he wanted to lose on the day. He had the discipline to stop trading. and it didn't hit his daily stop, and had the discipline to stop trading and walk away to come back the next day. A good day's trading doesn't have to be a profit. A good day's trading can be a loss. If it's a controlled loss, and it's just part of your trading plan. I think in this video here, CFT talks about he's hitting around sort of 65% win rate, so around 30%. I think 6% he said were 64% win rate, if I remember, around 6% scratch days, which left around sort of 34% losing days. This was just one of those 34% losing days. It's part of his trading plan. He had the discipline to stop trading and walk away and not break his daily stop. So head over to Canadian Futures Trader. I know quite a few people have joined us from his audience, but for those of you who are not familiar with his content, we've got a bit going on with him this week and in the coming few days with Trade Day. This is the video to watch, though, the second part of the sign-up process, and then if you're interested, follow him on a day-to-day basis. Well, I haven't really got into the start of the meat and bones of the morning meeting, but there is something else I want to just share with you. There's a podcast called Bloomberg Odd Lots. It's my favorite podcast, or one of them. And I was listening to this yesterday, why the dollar is booming and creating a possible doom loop. So this is a really good sort of 45 minutes to an hour podcast on the strength of the US dollar, but the implication for global trade and global central banks, why it's possibly entering what they call a doom loop. So a strong US dollar begets a strong US dollar. So, it kind of like feeds into itself only to make it stronger. Its impact on inflation and the difficulty that each sort of central bank or each part of the world is having to deal with. It's this imported inflation, the impact of energy on inflation, the impact on rising commodity prices on inflation, the strength of the dollar, and wrestling with all these things while trying to figure out, how they can control inflation through monetary policy and not cause issues with creating a potential recession in their country. And it also takes a look at how what the challenges that the Fed has, but also in the UK, the MPC, the challenges that the ECB have, which we're going to come on to now, because it's European Central Bank today, and all the focus is in Europe, and the challenges that the Bank of Japan has, and some of the other central banks around the world, the RBA in Australia. And it's about 45, 50 minutes long, and I think it's worth a listen. If you've got time today, listen to that. It's a great education on what's going through the central bankers' minds and the challenges they're wrestling with when it comes to monetary policy. Very good. Listen to that on the 45 minutes I managed to grab away from my desk yesterday, walking my dog. Right, let's move into it. Daily economic data release calendar. You can see that it's actually a pretty light data release calendar today, other than this pretty major event in Europe, the European Central Bank monetary policy rate decision and statement, now 37 minutes away. So I'm going to try and get off this webcast before then, give you plenty of time to get up from your desks and go and grab a cup of coffee and come back for it. So the central bank, the ECC central bank, is expected to hike rates today for the first time in over a decade, right? I think it's about 11 years. And the expectations are 0.25%. Some people are saying 0.5%. The other thing that they're going to announce is this a tool that they're going to be implementing to stop sort of defragmentation of the Eurozone. I don't quite know much about it, to be honest, but certainly all focus will be on the ECB and their rate decision and their policy statement. Okay, so they are dealing with a slow growth problem with the peripheries. I mean, we have Mario Draghi from Italy resigned. and Italy is in turmoil. So what we're seeing is German government bonds or the Bund market and the BTP spreads blowing out the BTP of the Italian government bond market. Those spreads are blowing out. So very difficult job for the ECB here. With rising inflation, got to do something to cap it. But at the same time, Eurozone is under a lot of pressure in terms of its stability and its output. And that is really why the euro is very weak against the US dollar. So that's happening in 35 minutes. As we move into the rest of the day, we've got the initial jobless claims, weekly initial jobless claims out of the US, and the Philly Fed manufacturing index. And that's again in 50 minutes. But that's about it, really. So not much out on the data front. I suspect that in the US, we are in for a relatively quiet trading session, barring any sort of breaking news. Obviously, all eyes on the ECB. If there's a huge surprise out of there, or if the market doesn't like what the ECB has to say, that will have some contagion effect onto the US markets. So we're going to be watching that. But after that, there isn't really a great deal. There's obviously the press conference, ECB press conference, and Lagarde was speaking actually later on. But the ECB press conference is will be the most important too, because I doubt Lagarde will be saying anything different than she's saying in the ECB press conference. So that's the economic daily outlook for today, economic data release outlook for today, I should say. Too much coffee this morning. Having a look at some of the sort of overnight news and headlines, Russia started sending gas through its biggest pipeline to Europe after a 10-day maintenance period. So this is pretty good news for the EU. It's obviously trying to store fuel before the winter, and it's already starting to unveil plans to try and curb gas consumption by 15%. This is, again, if you listen to that Odd Lots podcast, it has a lot of insight into what's going on. But essentially, we've got the war in Russia and the threat of further tightening of the gas supply by Putin from Russia into Europe. If the sanctions continue to bite and the war continues to rage on, etc., etc. So it's it's an ongoing story. But as I said, go and listen to that podcast. I think you'll find it very, very useful. Um, that's the same story. Oh, that okay. So we were looking at the headlines here. Yeah, there's not much in the way of headlines out, but the Russia. That's the Russian story. Let's see if there's anything in there else we should be looking at. No, that looks about fine. We have the Fed meeting next week, so there was, inflation number came out the other week, and it was really, really hot, right? It was like, oh my god, when's it going to stop going up? The thing about inflation is there's always a lead lag, right? It's always very difficult or very stubborn to get under control. But I think the way the market's been reacting in the last week, certainly the equity markets, is that we are thinking that they seem to think that it's peaking, and there was an initial knee-jerk reaction that the Fed might have to raise rates by 100 basis points, a full percentage point, at the next meeting. But that expectation starting to fall back, and it looks like the Fed is going to raise at 75 basis points at the next meeting. This article is I believe, a response to economists' polls. Let's have a look. The US Federal Reserve will opt for another 75 basis point rate hike rather than a larger move at its meeting next week to quell stubbornly high inflation, as the likelihood of recession over the next year rises to 40%, a Reuters poll of economists found. So, last week's print was 9.11%, a 4-decade high. Wow. Stoking inflation expectations. The Fed, having only just shifted gears more from 50% to 75 basis points at the last meeting, would act even more forcefully and go for 100 basis points. but some of the more hawkish Fed officials in public remarks have favoured a 75 basis point hike. So what they mean there is, you look at the members of the federal FOMC committee, the FOM Federal Open Market Committee, and some of them are going to be more dovish, and some of them will be more hawkish. And when the print was above 9%, the initial knee-jerk reaction was, oh no, they're going to have to raise interest rates by a full point, 100 basis points. And what subsequently happened is the FOMC members that are more hawkish, so the ones that will be most likely to vote for a 100 basis point hike, are actually sort of saying, nah, we're okay with a 75 basis point hike. So they're starting to be priced out of the market. I think that's what's given the S&P and the indices a little bit more of a bid, that and some positive earnings, which we'll take a look at in a moment. But essentially, that's what's happening in the rate expectation space in the United States. Going over to Forex Live site, which we like to take a look at. These are the headlines. Let me have a look. I think I pulled up the stories I wanted to take a look at. Excuse me while I have a sip of my tea. Two things to watch in the ECB policy decision today. So is it going to be 25 basis points or is it going to be 50? And then this is it. The anti-fragmentation tool is announced. So the market wants to hear what the ECB is going to do about this. But the problem is, as I said, we're facing a lot of political uncertainty within the bloc, particularly around Italy. Here's a piece on the spreads between the 10-year Italian, which are the BTPs, and the German bonds, which are the Bund market, has widened to 237 basis points on the day. So we're looking to hear about what she has planned here to try and counter some of the fragmentation that's going on in the Eurozone bloc. But the focus is really going to be on, what's the rate decision, 25 or 50, and what are they going to talk about in the meeting afterwards. Oil's continuing to look weak. We'll actually have a look at the charts in a minute. It says in this article, in just 2 days, oil has pretty much erased its recent recovery as we see another $4 drop today below 96. Okay, there's actually pretty important support around sort of 94, 95. Let's have a look. Latest retreat comes after an attempted push higher. The drop today brings the focus key support near 95 again. A 200-day moving average at 94.58 is the support level to watch. But we'll take a look at the charts in a moment. But just want to wrap it up with the earnings calendar. We're right in the middle of earnings season. I think I saw Steve's meeting yesterday. There is the ability to filter this by the most important. How did he do it? Filters. Okay, importance 3 stars. All right, there we are. I don't know if that's filtered it or not. Apply. There we go. All right, great. So these are the most important data that's out. Yesterday we could see a lot of green on the screen, which is good. Tesla beat after the close. Wrestling with a lot of supply chain issues there, but looks like that Tesla has done well in the last quarter. And what I get from this is just a general positive sentiment. And as we go into today, we've actually had some releases already. You can see some green on the screen here. AT&T beating. So, coming into the earnings season, there was a lot of worry that economists and forecasters had got it wrong, and that we were going to see a lot of misses in the data releases for these companies. But we're actually seeing a lot of beats. So that again has given a lot of strength or a lot of confidence back to the market, and put us in a position where we've seen. Let's have a look. Let's start with we've seen some firmness come in, and this is great. And look, we are currently through this level of resistance here. A nice strong day yesterday, extended the uptrend. I know Steve's bullish. I see it in his reports and catches meetings occasionally. So it looks like today we're in for a pretty quiet session. Will it hold yesterday's lows? I think so, because we see here quite a significant level of resistance that has now become a level of support. So yesterday bounced off this level of resistance. So I think it's going to hold yesterday's lows, and if anything, at some point extend through yesterday's highs and extend this trend up. So, I'm not really a technical person. I know, a lot of you are, and those of you are probably know more about technical analysis than I do. So I'm not going to sort of bang on too much about the charts, but certainly, from this picture here, it does look like that the equity indexes are nice and firm and are continuing to move higher. Right now for the last, this is the hourly chart. We can see we're in a period of consolidation. This may continue in towards this sort of uptrend here, and then find some momentum and break through this high to make a new high over the last 2 days, a new high in the week. But we are in for a quiet trading session. Remember, I can't. There's no real US data out that's going to drive price today. So have a look at the Nasdaq. It's a very similar picture in the Nasdaq. Again, in a period of consolidation. Probably, for will it? It's more likely to hold this level of support than it is to meet this level of resistance. That's the way I like to look at things. A nice firm trend up. Certainly, if it breaks this level of support, it could head down to this level of support here, which will kind of coincide with this uptrend. So that, if I have time to trade today and it's heading down here and it breaks, I'll probably take a short position, but with a relatively tight stop, looking for this kind of move downwards. But wish I had time to trade. So have a look at the treasuries. Canadian futures traders trading treasuries. Not many people on our platform trade treasuries, but we can see that firmly in a downtrend. Again, I know CFT is not a big technical analysis fan; it's more of an order book fan. But we can see here, look at, it's actually trading quite nice technically. Broke this quite large downtrend. You can see quite large downtrend here, and then marched up. So if I can expand that, doing this on my pad rather than with a mouse. Also apologize. Met this level of resistance here, and it's trended off. It's started to create a small downward trend here, and is currently sitting on this level of support. So if it breaks that, it looks to me weak. If it breaks this, that looks like an opportunity for it to trade down to sort of these kind of levels here. Crude oil, I'm just conscious of time trying to get through. Difficult to be long crude oil given the chart, but remember we're sitting on a very major level of support. 200 moving day average around 94.50 to 95. We can see that it's bounced significantly in the last couple of hours. Almost over a $2 rally, and then back. So this is a difficult one, right? Because look at it; it looks weak. It looks weak. So it's very hard to justify a long position. But we are sitting on this major level of support. I would be tempted to buy oil right now with a stop just the other side of this. This is the just the other side of this. Make the statement, if you like, I think it's put the lows in for the day. It might recover back, break through this 96.50 level here, which is maybe a small level of resistance, and head back up towards this kind of like 97 to 98 area. So pretty good risk reward here. Stop, say, around 94.25, targeting sort of around 97.50. We have a look at gold. I'm not a gold trader. I don't think we have anybody trading gold at the moment. I'll have to check with Terra. our trading managers keeping an eye on the trading for us. But very, very weak market. Very difficult to go long in this market at the moment. And very difficult to go short, right? It's come off so far, and that's kind of like the bias that sits in our mind when things have gone so far. We sit there and think, well, it must come back at some point. So we end up. That's how we end up walking into trying to pick bottoms and just. There was a saying in England, in the English trading rooms. It's pretty crude. I'm going to go for it. I'm sorry, but those who pick bottoms get smelly fingers, and I'll just leave it there. That's it for the day. I wish you luck today. Have a great trading day. Check out the Canadian Futures Traders website. He's, as I said, is posting every day now. His attempt to pass the challenge, but I really like the way he's thinking about how to trade. And I think there are some lessons in there for us all. So good luck. Have a great trading day. And I'll see you tomorrow. I'm back tomorrow.